Kwon is a South Korean native CEO. Do Kwon swiftly rose to prominence in the cryptocurrency business after establishing the now defunct Terra coin in 2018. Do Kwon quickly established a fantastic presence in the blockchain industry by ushering in the age of a decentralized dollar-pegged stablecoin UST in 2020. When Do Kwon was in his late 20s, he started his cryptocurrency project, Terra. Other well-known digital entrepreneurs, including co-founder Lee Tai-chin from KakaoTalk and JB Lee from Dunamu, helped him out. Together, they've worked to create Terra, a cryptocurrency platform that can transform digital payments by utilizing blockchain technology. In May, the value of Terra's USD and Luna cryptocurrencies fell by over $45 billion in a matter of 72 hours. The Terraform Labs developed token USD is an algorithmic stablecoin, which means that it employs a sophisticated combination of code and Luna to stabilize the process, rather than holding cash and other assets in reserve to back its token. In the extremely turbulent cryptocurrency market, stablecoins assert themselves to be a reasonably safe sanctuary. The drama, however, demonstrated that algorithmic stablecoins, a complex and subpar kind of banking reserve, are equally as volatile as other cryptocurrencies. So in this video, let's take a detailed inside look at how this collapse happened and who was responsible for it. However, it appeared that the Terra stablecoin's architecture had flaws because it was unable to withstand the mid-2022 bank run, which finally caused the collapse of the ecosystem. The cost of Terra Classic and UST was around $110 before the occurrence. Investors began selling off large quantities of Luna and UST though, as soon as the UST peg appeared shaky. Do Kwon promoted the cryptocurrencies Terra USD and Luna. Some traders have been crushed by their failures, but not the investment companies that cashed out early. Do Kwon referred to his 2018 conception of a cryptocurrency as "my greatest invention." He encouraged a group of investors and followers he proudly referred to as lunatics by extolling the world-changing possibilities of the currency Luna in many tweets and interviews. Even as detractors questioned the currency's technological foundations, Mr. Kwon's business, Terraform Labs, received more than $200 million from investment companies including Lightspeed Venture Partners and Galaxy Digital to support crypto ventures created with the currency. The value of Luna as a whole increased to more than $40 billion, sparking a flurry of enthusiasm that attracted affluent investors, day traders, and startup innovators. Mr. Kwon dismissed concerns by saying that "I don't debate the poor." Luna, as well as another Mr. Kwon invention, Terra USD, just experienced a stunning collapse. Their collapses sent ripples across the cryptocurrency market, driving down the price of Bitcoin and hastening the $300 billion in value loss that has already occurred. The cost of Luna stayed relatively unchanged this week, but Terra USD's value declined. A case study in crypto hype and who ends up carrying the bag when it all collapses is provided by the demise of Luna and Terra USD. Respected financiers who were ready to support extremely speculative financial instruments made Mr. Kwon's ascension possible. Some of those investors made significant gains when they sold their Luna and Terra USD coins early, while regular traders are already dealing with terrible losses. After selling approximately 80% of its interest in Luna during the last year, Pantera Capital, a hedge fund that invested in Mr. Kwon's initiatives, realized a profit of almost 100 times its initial investment, according to the firm's investor, Paul Veradidakit. Pantera increased its value from $1.7 million to around $170 million. Unfortunate, according to Mr. Veradidakit, was the most recent crash. Many small-time investors have suffered losses. Many institutional investors have, I'm sure. Messages left for Mr. Kwon went unanswered. The majority of his other investors steered clear of making any remarks. The rise and collapse of Luna and Terra USD, according to Kathleen Brittman, one of the creators of the cryptocurrency platform Tezos, were caused by the reckless actions of the institutions supporting Mr. Kwon. She continued, "You've seen a lot of individuals attempting to trade in their reputations to get fast money. They're trying to comfort people who are seeing their life savings slip out from under them," she added. "There is no justification for such." A Stanford University alumnus, Mr. Kwon launched Terraform Labs in 2018 after working as a software developer for Apple and Microsoft. His business claimed to be developing a modern financial system that would enable customers to carry out intricate transactions without the assistance of banks or other middlemen. In 2018, Mr. Shin and Mr. Kwon started promoting the Luna money. 2020 saw the launch of Terraform's stablecoin Terra USD, a sort of cryptocurrency created to act as a trusted medium of trade. In contrast to other cryptocurrencies, stablecoins are not expected to fluctuate in value and are often anchored to a reliable asset like the US dollar. Stablecoins are frequently used by traders to acquire and sell other risky assets. However, Terra USD was dangerous even by the norms of developing cryptography. It was unlike the well-known stablecoin Tether in that it wasn't backed by money, government bonds, or other conventional assets. Rather, it obtained its alleged stability from formulas that connected the value of its worth to Luna. In the murky realm of decentralized finance, often known as DeFi, Mr. Kwon utilized the two connected currencies as the foundation for more complex borrowing and lending initiatives. Crypto specialists had their doubts about an algorithm's ability to maintain the stability of Mr. Kwon's twin coins from the start. Cyrus Younessi, an analyst for the cryptocurrency investment company Scalar Capital, received a white paper explaining the stablecoin concept in 2018. In a letter to his manager, Mr. Younessi warned that the project would experience a death spiral in which the stablecoin would fall in value along with the price of Luna. In a recent interview, he stated, "I was thinking, this is ridiculous. Obviously, this doesn't work." The critics got louder as Luna began to understand. In an interview from last year, Charles Cascarilla, the creator of Paxos, a blockchain business that provides a rival stablecoin, questioned the underlying technology of Luna. In response, Mr. Kwon tweeted the remark, "WTF is Paxos?" Hedge fund manager Kevin Chow consistently foresaw the collapse of the two currencies. However, venture capitalists flooded the market to finance ventures based on Luna's core technology, such as services that let users borrow and lend Terra USD or swap cryptocurrencies. According to PitchBook, which tracks funding, investors including Arrington Capital and Coinbase Ventures invested more than $200 million between 2018 and 2021. From less than $1 in early 2021, the price of Luna reached a peak of $116 in April, creating a new generation of crypto billionaires. Around the currency, a group of small-scale dealers developed who hailed Mr. Kwon as a cult figure. Mike Novogratz, CEO of Galaxy Digital, a company that invested in Terraform Labs, publicly showed his support by getting a tattoo with the Luna design. Mr. Kwon, who has offices in Singapore and South Korea, boasted on social media. His baby daughter was given the name Luna in April. He tweeted, "My dearest creation is named after my greatest invention." The pompous, haughty Do Kwon mentality that permeates the cult of personality, according to Brad Nickel, presenter of the Mission DeFi cryptocurrency podcast, is what draws people in. Recently, a foundation that Mr. Kwon also oversees sold $1 billion of Luna to investors and used the money to purchase a supply of Bitcoin in order to maintain the price of Terra USD in the event that the markets ever fell. A few of the venture capital firms that had sponsored Mr. Kwon began to have doubts at the same time. In December, crypto-focused venture capital firm Hack VC sold its Luna tokens in part because we felt the market was due for a broader pullback, according to managing director Ed Roman of the company. The founder of the Hong Kong-based venture capital firm CMCC Global, Martin Baumann, said that his business sold its interest in March for an average price of $100 per coin. In an email, he stated that both from the IT side as well as the regulatory side, we had received rising concerns. Even Mr. Kwon hinted at the likelihood of a cryptocurrency crash by openly joking that certain crypto projects would eventually fail, claimed that he finds it entertaining to see businesses fail. Falling cryptocurrency prices and difficult economic trends conspired to frighten the markets last week. Luna's cost almost reached zero. As anticipated by detractors, Terra USD's value also plummeted in unison, falling from its $1 fixed price to as low as 11 cents this week. The cryptocurrency ecosystem Mr. Kwon had created was practically worthless in a couple of days. Major investors in Mr. Kwon's have suffered financial losses. Changpeng Zhao, the CEO of the cryptocurrency exchange Binance, which invested in Terraform Labs, said that his company had purchased $3 million in Luna, a cryptocurrency that eventually reached a peak of $1.6 billion. Yet Binance has never sold any of its tokens. Currently, the value of its Luna holdings is around $3,000. For a business the size of Binance, whose loss is worth $4.5 billion, that loss is still a drop in the ocean. Most VCs have the analysts needed to evaluate these situations, according to Mr. Nickel. They could have believed they might profit from the retail industry. Instead, everyday traders have experienced a large portion of the collapse's sorrow. Users exploded lists of suicide hotlines on a Reddit thread for supporters of Luna, as many who had invested their savings in Terra USD or Luna voiced anguish. Enthusiasts who were creating startups on the crypto infrastructure Mr. Kwon established have also been crushed by the crisis. Neil Sumani left his position as a quantitative researcher at Citadel, a hedge fund, in February to work on a project that linked Ethereum, another cryptocurrency system, to Luna's underlying blockchain. Mr. Sumani joined Terra Hacker House as a one-month initiative incubating concepts based on Mr. Kwon's technology and supported by Terraform Labs and its investors at a Chicago office. Within a short period of time, Mr. Sumani secured $10 million in venture capital commitments, which valued his enterprise Terra Nova at $65 million. He said that he was close to recruiting 3 people and that 40 consumers were enthusiastic about the prospect. Mr. Sumani and his other hackers first believed Mr. Kwon and his associates could reverse the situation after Luna and Terra USD collapsed. But by last Tuesday, Mr. Sumani had come to the conclusion that everything was finished, and he was glad he had delayed accepting the funds. According to him, he lost about $20,000 on Luna, but he didn't care because he had gained money on other hazardous stock and cryptocurrency trades. The Hacker House's workstations have been empty for some time. Rebuilding Terra, a Telegram group with about 200 members, has been actively talking about ways to rescue projects and funding. Mr. Sumani is optimistic. The feast and famine attitude comes really naturally to those of us who are crypto builders, and that's maybe what attracted us to the community, he added. He intends to present his now outdated technology during the Hacker House's demo day on Thursday. He said that because the majority of other teams had dropped out, there would be less competition for the $50,000 first place award. That was all for today's video. Share your thoughts with us in the comments section. Don't forget to give the video a thumbs up if you liked it, and if you're new to the channel, subscribe to the channel for more fascinating videos. I appreciate you taking the time to view this video. We'll see you in the upcoming video soon.